the Democratic Republic of Congo, and we have the Southern Africa down the line, largely dominated by South Africa, Lesotho, Mozambique, and the rest of them. The last decade has witnessed an economic boom in several countries in Africa, and people will be surprised when I make these sweeping remarks at a time when the world is suffering from a crisis. In line with the integration of the global economy, the insurance markets in the continents are presently undergoing regulation, liberalization, and consolidation. Nigeria, which is the most populous of the countries in that region, went through a consolidation and capitalization regime some 5 years ago in 2007. And that crashed the number of insurance companies in that market from 140 to 52. I heard yesterday that with 60 companies in a 5 million population, at that point in time, Nigeria had a population of 140 million. We're approximately 160 now. And the number of companies then was 140, which is like 1 million people to one company. And if you look at UAE with 5 million people, you probably will be looking at 5 companies to 5 million people. And I know some other countries in the continent are also following this same example. Ghana has also raised the bar for insurance capitalization, and that is also reflecting in some level of mergers and acquisition and consolidation in that market. With increasing liberalization and deregulation of the economies of most of the countries in the continent, the monopoly state-owned companies that were characterized by the structure of the market are now being privatized, and the markets are opening up to competition from within and from outside the continent. Most of the countries following independence set up their own national insurance company, and you have, like in Nigeria, the National Insurance Corporation of Nigeria. You have the Gambia National Insurance Corporation. We have the State Insurance Corporation in Ghana. You have the National Insurance Corporation in Tanzania. You have the National Insurance Corporation in Zambia. Most of the countries in the continent had these national companies. But with deregulation, most of these national companies are being privatized and sold to private investors who now run them as a private entity. It will interest you, however, to know that the African share of the world insurance business has stayed within a very narrow margin of 1.1 to 1.3%. In 2009, the market generated about $52 billion income, out of a global market income of $4,064 billion. The South African market alone accounted for about 73% of the continent's premium income. The graph here shows the insurance penetration in different continents of the world and the GDP of those nations. You have North America dominating this market with 7.9%, closely followed by Europe with 7.6%, Asia 6.1%, Oceania 6.2%, Latin America and the Caribbean 2.8%, Africa 3.5%. With a 2009 insurance penetration of 3.5 as against a worldwide figure of 7.0, the African market have significant growth potentials. A cursory look at the top 6 insurance markets in the continent would show the areas of growth in that region. Here you have South Africa with a premium income of about 37.9 in 2009 and an insurance penetration of 13.2. Morocco with 2.6 billion US dollar, an insurance penetration of 2.9, closely coming second, distantly coming second. You have Kenya with 0.85 billion premium and 2.8 insurance penetration. Egypt, 1.43 with 0.8 insurance penetration. Algeria, 1.06 with 0.8 insurance penetration. And Nigeria, 1.2 with 0.7 insurance penetration. In the next slides, I've tried to put the population of each of these countries as at the time of writing, as at 2009, vis-a-vis their capital base, and then the premium income written in each of those markets. And that changed the picture a little bit. Here you have South Africa with an insurance penetration ratio of 13.2, which I said, and ranking top with the 5th position. And we have Egypt and Algeria coming 4th with an insurance penetration ratio of 0.8. Morocco 2nd with 2.9, Kenya 2.8, and Nigeria 0.7. The challenges facing the African insurance market could best be described as both developmental and competitive. The culture of insurance in developing countries in Africa is at a snail speed because of the low per capita income of the countries, resulting in low purchasing power and poor infrastructure. The forces of competition have dragged rates down to ridiculous level, in some instances due to proliferation of companies. In fact, we say that while other prices are going up, insurance premium is one product that its prices are going down. Some of the challenges facing these markets are capitalization. Some of the companies in the market are undercapitalized, and that also encourages proliferation. The market penetration of these companies are also very, very low. The development of microinsurance is at its lowest ebb in this region. The need for manpower development is very, very high in this area. There is also need to improve regulatory control and a definite effort to promote cross-border trading. Technology development is also very low. The pay and welfare structure of the industry is also quite low compared to what obtains in some other industry, resulting in the inability of this market to attract high-quality personnel to work in those regions. The market regulation, like I said, are undergoing review, and this is continuous. Some of the direct challenges that the company face in this area is in the area of premium payment and collection. In Nigeria, in an attempt to solve this problem, the insurance legislation provides for what we call no premium, no cover. But unfortunately, you still have huge balances in the books of many companies resulting from competition. Late payment of premium by clients, sometimes late payment by insurance brokers, late remittances to reinsurers, resulting in inability of those companies to get adequate cover for their insurance needs. There's also the changing needs of and demands of clients in this region. Automation of processes is also a major challenge. There is also the need to increase the client base and deepen the insurance penetration to take advantage of the large population of this region. I said at the beginning that the continent is the second largest in terms of land area. The opportunities open to investors in this region are numerous, and I just try to outline some of them. The untapped and new areas for insurance industry is in the area of the small and medium enterprises. The focus of most of the companies are on the large commercial and government sector, where people believe that you will get the big buck as quickly as possible. The personal lines are very, very low, and I said the low per capita income of the countries is largely contributory to this. Agric insurance, because most of the African countries are largely agrarian in nature, the development of agric insurance also needs to be given a boost so that insurance can really make a definite impact on the economy of this nation. One of the things that is peculiar to the African people is funeral. Quite a lot of expenses is incurred in this area. Insurance directed towards this can also make a kill in those markets. Microinsurance also have a space because the large majority of the population and the large number of businesses are small, medium in nature. The compulsory nature of some of the insurance products in this market, like public buildings, motor insurance, workmen compensation, are areas that an investor can really tap into. There's also opportunities in the area of communication network, and Nigeria provides a typical example in this area that prior to the liberalization of the communication sector, the average telephone lines that we have in that country was about 400,000. And in less than 3 years, this has risen to as high as 100 million. Nearly everybody that can make a price have a telephone line. And I know this is what is happening all over the world. This will also afford the industry opportunity to reach the grassroots through communication. The large population of the African continent, with 160 million in Nigeria, is a golden opportunity for investors in this market. There is the need to reach out through different communication networks, social media, internet, telephone, mail services, and foot soldiers to sell insurance in the area. There is also opportunity for cross-border trading, acquisition of foreign companies, local companies, and the regulation in most of this market is now free, such that you do not, unlike post-independence era, where foreigners can only own 40% of insurance enterprises in a country like Nigeria. Today, you can have a wholly owned foreign company established in Nigeria. Although it would be advisable because of culture and knowledge of the local environment that you have some association with local investors to be able to make a headway. But nothing stops a company from establishing wholly owned subsidiary in a country like Nigeria. There's also the similarity of culture and the attitude of the people, which will help to promote insurance across borders within the continent. The African market, with its large population, offers great potential for international institutions willing to deploy capital, technology, and skilled manpower. The African Insurance Organization, AIO, and the West African Insurance Companies Associations are veritable institutions that can be used for provision of information for such investors.